IRS Form 1099. Can you pay for cars, houses, etc.? What is people must understand: this information is not a get-rich-quick scam. You go out here operate in commerce. You claim and protect what is yours. If you don't work for others or work for self, you do not eat. People want a quick come up, and this ain't that and that ain't it or this. Now back in the day before I had the things I have set up now, I too wanted my money and was trying to figure out how to get back what I worked hard for. Since no one helped me, I tend to do things backwards. I did all my 1099A, B, C, OIDs, 1040V and etc. My understanding was I am claiming my debt so I can get my credits for my debt. It was never to think I could buy something using the 1099A. So I used my fake great credit score, playing the game, and got my car off the lot. Now I want to discharge and claim my credit, which is my money for my car. The IRS never said I did anything wrong, however they said I will not be receiving my credits. In their defense, I was looked upon as an incompetent minor that is public but trying to do private commerce, which you never mix the two. When we go obtain houses and cars, we never claim our assets. So they go behind our backs and claim our credits with these forms. As you see, you are either acquiring your property or abandoning your property. On the public, you are a debtor. On the private side, you are the creditor. Creditors get all the benefits. From my understanding, you have 3 months to claim your alleged debt. After that, they do this form and claim you abandon your property. So now someone else can claim your credits, and they do courts cases also do 1099A for each case, because everything is taxable. If you can get your actual 1099A, you can definitely prove fraud and the theft that is going on. Creditor. A creditor is someone, or an entity, to whom an obligation is owed. Most commonly, the obligation owed is an obligation to pay money for some prior services or to pay a loan. The person who owes a creditor an obligation is known as a debtor. The area of debtor-creditor law governs the obligations between creditors and debtors, as well as the available methods a creditor can utilize to force the debtor to satisfy those obligations. The primary judicial methods used to ensure performance of these obligations include liens on property, garnishment of income, and requiring other security interests. In the event a debtor is unable to repay their creditors, they may choose to declare bankruptcy. If this occurs, the assets a creditor can recover are governed by bankruptcy law. In a bankruptcy proceeding, all of a debtor's creditors are tiered in a list based on the type of debt they hold. The debtor's assets subject to the bankruptcy proceeding are then distributed out down the list, with the lower-tiered debt not receiving any of the proceeds until the higher-tiered debts are entirely paid out. For example, all creditors with priority claims will be paid out before any creditors holding non-priority claims. Last updated in July of 2022 by the WEX Denitions team. Lee WEX. Guidepost https://www.law.cornell.edu/wex/creditor. A debtor is someone who owes a debt or obligation to someone else. Most commonly, this is the obligation to pay money. A classic example is within the situation where a bank extends a loan to an individual or business entity, creating the obligation for the individual or business entity, as the debtor, to pay back the loan plus interest. The entity lending the money or item is known as the creditor. In bankruptcy law, the debtor is the person who lets a voluntary bankruptcy petition, or the person against whom an involuntary bankruptcy petition gets led. In a secured transaction, the debtor is the borrower or buyer who puts up property as collateral for a loan or purchase, which gives the creditor a security interest in the property. This means they have a right to take the property if the debtor does not pay their obligations. In a secured transaction, the credit extended to the debtor is not necessarily a monetary loan. It could be the purchase item itself sold on credit. For example, a person wants to purchase a computer. The computer costs $1,000. The purchaser does not have all the money right now, so the computer store sells the computer on credit and the person buying the computer has to pay the purchase price over a specified length of time, but they are able to take possession of the computer right away. Here the purchaser is the debtor who owes an obligation to the computer store to pay the price of the computer. CUCC Section 9 to 102, 28. Last updated in September of 2022 by the WEX Denitions Team, WEX Commerce Banking Nance. Lee greater than WEX. Greater than debtor. Debtor. Guidepost https://www.law.cornell.edu/wex/debtor. 1099A. Void corrected. $. 1099A. Copy A. Form. Borrower's name, city, state, and zip code. Street address including apt. No. Account number, see instructions. Lender's name, street address, city, state, zip code, and telephone. No borrower's identification number. 3. CAT. No 14412G. 6. Description of property. Number 15450877. Form 2. Balance of principal outstanding. 5. Was borrower personally liable for repayment of the debt? Yes. Number 4. Fair market value of property. Department of the Treasury, Internal Revenue Service. Acquisition or abandonment of secured property. Lender's federal identification number. 1. Date of lender's acquisition or knowledge of abandonment. 8080. For Privacy Act and Paperwork Reduction Act notice, see the 2006 General Instructions for Forms 1099, 1098, 5498, and W2G. File with Form 1096. For Internal Revenue Service Center. Do not cut or separate forms on this page. Do not cut or separate forms on this page. 06. Red goes to IRS. 1099A. Corrected if checked. 1099A. Copy B. Form. Borrower's name, city, state, and zip code. Street address including apt. No. Account number, see instructions. Lender's name, street address, city, state, zip code, and telephone. No borrower's identification number. 3. 6. Description of property. No 15450877. Form 2. Balance of principal outstanding. 5. Was borrower personally liable for repayment of the debt? Yes. No. This is important tax for fair market value of property information and is being furnished to the Internal Revenue Service. If you are required to file a return, a negligence penalty or other sanction may be imposed on you if taxable income results from this transaction and the IRS determines that it has not been reported. Department of the Treasury, Internal Revenue Service. Acquisition or abandonment of secured property. Lender's federal identification number. 1. Date of lender's acquisition or knowledge of abandonment. Keep for your records. For borrower. 06. Copy for self. Instructions for borrower. Certain lenders who acquire an interest in property that was security for a loan or who have reason to know that such property has been abandoned must provide you with this statement. You may have reportable income or loss because of such acquisition or abandonment. Gain or loss from an acquisition generally is measured by the difference between your adjusted basis in the property and the amount of your debt canceled in exchange for the property, or, if greater, the sale proceeds. If you abandon the property, you may have income from the discharge of indebtedness in the amount of the unpaid balance of your canceled debt. You also may have a loss from abandonment up to the adjusted basis of the property at the time of abandonment. Losses on acquisitions or abandonments of property held for personal use are not deductible. See Pub. 544, Sales and Other Dispositions of Assets, for information about foreclosures and abandonments. Property means any real property, such as a personal residence, any intangible property, and tangible personal property that is held for investment or used in a trade or business. If you borrowed money on this property with someone else, each of you should receive this statement. Account number may show an account or other unique number the lender assigned to distinguish your account. Box 1. For a lender's acquisition of property that was security for a loan, the date shown is generally the earlier of the date title was transferred to the lender or the date possession and the burdens and benefits of ownership were transferred to the lender. This may be the date of a foreclosure or execution sale or the date your right of redemption or objection expired. For an abandonment, the date shown is the date on which the lender first knew or had reason to know that the property was abandoned or the date of a foreclosure, execution, or similar sale. Box 2 shows the debt principal only owed to the lender on the loan when the interest in the property was acquired by the lender or on the date the lender first knew or had reason to know that the property was abandoned. Box 4 shows the fair market value of the property. If the amount in Box 4 is less than the amount in Box 2, and your debt is cancelled, you may have cancellation of debt income. Box 5 shows whether you were personally liable for repayment of the loan when the debt was created or, if modified, when it was last modified. Box 6 shows the description of the property acquired by the lender or abandoned by you. If CCC is shown, the form indicates the amount of any Commodity Credit Corporation loan outstanding when you forfeited your commodity. 1099-A. Void corrected. $. 1099-A. Copy C. Form. Borrower's name, city, state, and zip code. Street address including apt. No. Account number, see instructions. Lender's name, street address, city, state, zip code, and telephone no. Borrower's identification number. 3. 6. Description of property. OM-NO 15450877. Form 2. Balance of principal outstanding. 5. Was borrower personally liable for repayment of the debt? Yes. Number 4. Fair market value of property. Department of the Treasury, Internal Revenue Service. Acquisition or abandonment of secured property. Lender's federal identification number. 1. Data of lender's acquisition or knowledge of abandonment. For lender. For Privacy Act and Paperwork Reduction Act notice, see the 2006 General Instructions for Forms 1099, 1098, 5498, and W2G. 06. Acquisition or abandonment of secured property. 1099-A. Instructions for lenders. General and specific form instructions are provided as separate products. The products you should use to complete Form 1099-A are the 2006 General Instructions for Forms 1099, 1098, 5498, and W2G, and the 2006 Instructions for Forms 1099-A and 1099-C. A chart in the General Instructions gives a quick guide to which form must be filed to report a particular payment. To order these instructions and additional forms, call 1-800-TAX Form 1-800-829-3676. Due dates. Furnish copy B of this form to the borrower by January 31, 2007. File copy of this form with the IRS by February 28, 2007. If you file electronically, the due date is April 2, 2007. To file electronically, you must have software that generates a file according to the specifications in Pub. 1220, Specifications for Filing Forms 1098, 1099, 5498, and W2G electronically or magnetically. IRS does not provide a fill-in form option. Caution. Because paper forms are scanned during processing, you cannot file Forms 1096, 1098, 1099, or 5498 that you download and print from the IRS website. I'm only a guidepost, not here to do the work for you. Only here to take you to resources to give everyone an opportunity to have information that can better self and others around them. You have to put in the work to obtain what you want and need. We as a whole shouldn't work for nothing, and we all do. We work for others and still struggle. Our worth is more, and we must see the value in self. I only want and feel entitled to what I work for. I only want to protect what I worked for. So we must hold the system and the people running the system accountable as they do us, the people who are looked upon as the little people. At the same time, the people who actually run this and other nations off our hard work. Hope you continue to enjoy the information. You must read and go to the source, law and government sites. Use their words against them and start making them do their jobs properly. They are public servants here to serve the public.